Kathleen Shelton-Smith is the co-founder of Renaissance Capital, the expert on IPOs. Joins me now live from Stamford, Connecticut. Always good to have you. Now, from our previous interviews together, one of the things I always remember now is it's really bad news if a company breaks its IPO price. Uber didn't even open at the IPO price.
You know, it is bad news. There are about two sides to this coin, but I think it's important to start out by saying the Uber IPO was one of the top 10 largest IPOs ever. And large IPOs often have a rocky road to start. So let's go back to Facebook. It did not trade well for months when it first came public, and Google the same thing. So that is always a risk of these very large IPOs for any investor that's thinking, oh, I'll jump in on the first day and it'll keep going up from there.
But what should we now look for as the price moves forward? I mean, one assumes the price has settled around 42 to 43 and change, and that seems to be where the market likes to keep it at the moment. But as we look in the weeks and months ahead, in terms of the company and its price, what should we be focusing on?
Well, certainly, I think the big area of focus will be when management reports its next quarterly results, because we'll get to see how they're progressing on the progress of what they've said in their roadshow, and understanding if management is going to meet investor expectations. So that'll be an important thing. And I think that it's a stock to sort of sit back and wait to own for a little bit, because this early trading is kind of a black eye for the stock. I mean, I feel that for the IPO market, it'll probably help pricing on the next deals that come out, because investors are going to be, and issuers are going to be cautious about what price they put on. But I think this sort of sticks to the Uber, Lyft, the big money-losing IPOs that are real hard to handle. The rest of the IPO market's doing quite well, thank you. The Renaissance IPO ETF is up over 30% so far this year. It's hit an all-time high last week. And already the ETF includes Pinterest, which has done well, Zoom, which has done very well, and we own Lyft. And the ETF will pick up Uber at the end of next week.
What about, go ahead, what about the Beyond Meat? How do you describe what happened there?
Investors were really interested. It's the first time they had a pure play in the meat alternative business, which is has a big addressable market. And this company was growing over 200% a year. So investors were willing to tolerate the losses, knowing that this company just had so many orders for its products. That's what happened there. Now, it's way overdone. But Beyond Meat, for example, will end up being in our ETF. We're going to put it in at the next rebalance. It's a $4 billion market cap company. You know, there's another company on the calendar that reminds me of possibly what we're going to see, had seen with Beyond Meat. It's called coffe.
Right.
This is the fastest growing Chinese pickup coffee network. It's growing so fast, it'll probably surpass Starbucks very soon in how many outlets it has. Now, the Chinese, they drink tea, not coffee. On average, they drink a cup of coffee every other month, which is, I can't even believe. I mean, I know what the statistics are here. So the minute you get your cup of coffee, and then you're Chinese, and you'll throw away the tea and say, I've got to have my coffee. Right. I mean, I think the opportunity for Luck and Coffee is pretty darn good.
Luck and Coffee, we'll watch it closely, and we thank you, as always, when we need expertise on IPOs. You are the person we turn to. I appreciate it.